Good morning, everyone, and welcome to Nadex Morning Analysis. It is June 4th, and we've got a bit to talk about this morning because we just had the May jobs numbers come in for the U.S. Before we look at the hot spots in the markets today, a quick introduction. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I get into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Okay, so first of all, with that, I'm just going to put up the numbers. This is on the Daily FX economic site, economic calendar site. Non-farm payrolls came in. It's a competitive market for employees. I'm going to let Brian run through all the numbers, but what we are absolutely seeing an immediate strong reaction, and this is what we're going to be talking about today: the U.S. dollar. The U.S. dollar is getting hammered. If we take a look, the top three currency pairs that I've got here, the dollar's in the second position. So against the euro, against the Aussie dollar, against the pound, these very significant spikes higher. I mean, you can see them. It's not difficult to see where the dollar's in the first position in the pair, the Canadian dollar, the Swiss franc, the yen spiking down. So the dollar is getting hammered this morning, and with that, and we're seeing a spike in gold. So that's really what we're going to end up talking about today: is the dollar and gold, all on the heels of these of the May jobs numbers here in the U.S. So, Brian, I'm going to go ahead and flip it over to you, and let's get into it.
Sure. Yeah, I mean, obviously those numbers, it's kind of hard to read when you look at it on the kind of top line. You're like, wait a second, we have some green, we have some red. What does that actually mean? And then actually, in reality, it actually tells one specific story, and it talks about the labor markets. And that's really how we're judging what recovery looks like. If you think about it, what was the most disruptive aspect of COVID? It was the fact that we had so many shutdowns, the employment situation. I mean, people were working from home or not working at all. There was massive layoffs. There was no service industry. Well, there's terminology out there called a loose or a tight market. Right now, this tells one story, that we are now in a tight labor market. And what that means is basically that employees, the people that are basically the job guys, they are in control right now. What is happening is companies are not able to hire back as many people as they like. So what do they need to do? They need to pay people more. So we have an average hourly earnings of 0.5% increase versus a 0.2, showing that, hey, listen, we got to get people in here. We need employees. The non-farm employment change means how many people are getting hired back, and it's less than expected, meaning that not as many people are accepting, but at the same time, we're watching the unemployment rate go down. So it's people not necessarily coming back into the labor market that were in it before. So it's definitely an interesting read. Now, a loose market tends to be associated with a recession. We are in the exact opposite of that. So it's kind of again, it is a little bit of a conflicting story from what we've seen. We keep hearing how bad the economy is and how fragile it is and everything, but all the data seems to suggest the exact opposite of it. And when you look at the overall markets, I mean, starting at the top line again, just looking at the dollar index, you can see it basically went straight down. Okay, talking about, it's a tight market, but again, they're not seeing the inflationary. Well, it's the lack of kind of motivation to change it, I guess, is more kind of where we're seeing the price action show us right now. And again, the dollar heading straight down. Now, gold is obviously spiking the exact opposite direction, heading back up. And again, I do expect reversals from these. And it's one of those things, the Fed, because they have their head in the sand, they have just not really mentioned much about it. And that's really, it's kind of setting the markets off, right? If you look at the overall indices for the most part, they had a quick spike, but they're really pulling back again. It really doesn't change much. I mean, here's the NQ, and again, the data is slightly delayed, but this is a 30-minute chart. you can see we had a spike up, spike down, and we're literally almost in the exact same situation we were when we started. And you may say, but wait a second, isn't this great? I mean, the unemployment rate is coming down, but you still need people to have those jobs, and it's just showing where we're at in the recovery phase. Big question on most traders' mind is, what do we do with it now? All right, I would say the news could have been much, much worse. You can see from yesterday when we had those numbers, we had a nice pull, a nice kind of push forward. They came back down and grabbed the same buyers and then really rallied back up again. But for the most part, is any of the news that we had today earth-shattering? Is it going to change the fundamental basis of the economy? And what type of trading opportunities they're going to provide? The answer is probably not as much as you would actually think. Due to the fact that it was a holiday week, we had those other numbers. That's why we're getting this one right now. So I would say, overall, the Fed's inaction is actually providing us a little bit more of kind of probably more of a bullish mindset. I mean, again, there is good, the numbers are good. The unemployment rate coming down is a great thing, right? Employees getting paid is a great thing. The unemployment change kind of matters a little bit because not as many people are being hired, but it is a favorable environment. Again, they're anxious to get people back in there. They're paying people more, right? Whether people accept is another kind of story there. So again, that's kind of the one little monkey wrench. But remember, the one biggest problem we've had right now is, if everything is so great, when is the Fed going to start making sure that we don't kind of go overheat, like not creating a bubble and going crazy? And, an easy way to look at that is look at the currency market in the last 24 hours. Even though we've had this blockbuster news and everything was a miss, you'll see that the euro dollar is only down 11, pound dollar is up 6. This is not 100, 200, 500 pips in the opposite directions, but everything's spiking. So it's kind of what we talked about earlier this week, as far as how we can trade it. I guess pound dollar is an easy one because we've had pound strength. It's continuing to rise, right? We're having that weak dollar right now, and it's going higher, 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 and higher. But here's the UK Open. What was the pound dollar doing in the UK session before this news even came out?
Already heading that way.
They were already going, right? They drove it down yesterday in preparation for the news. The European trader came into the market early, started buying these things, giving us some pound strength, and then did what? They continued to ride it. They were already in a great position, and they're selling here, or they were just riding it longer. Now, we will be looking for reversal at some point. We've seen kind of areas up top. I would say that there is probably a reversal coming in today, especially when that market closes. And we do have an area where we're looking to go long, but I would say right now, because this is such a parabolic move, since the UK Open, we're at about 97 pips right now. That's a lot, right? What have we called it in the past? Profit taking, right? Profit taking. So I do think that there will be, depending on how fast this slows down, we will probably see some type of a top in there like this. But I think 41.96 could be a potential reversal point today. All the Fed presidents and governors and everything are in meetings today, but there will be some headlines because again, you got to talk about it. Non-farm is the biggest piece out there, but I would say 14.96 is probably a decent level. There was a very similar trade also in the dollar CAD, and again, the Canadian dollar also had data today. I would say of these two, it's a very similar type trade, but the pound dollar, we're still waiting for that reversal point to come in. Look at this one. Again, we'll see what the U.S. market open does at 9:30, but I'm thinking 10:30 today may be a potential time for the profit takers to say, hey, you know what? It's Friday. Time to sell my positions, take my profit, and get the heck out. And when you see a bunch of selling coming in, that will reverse. And then again, it coincides with what we see here in the dollar CAD. And again, levels probably down in this range right here would be kind of where we're looking for this one to reverse. And again, it's got a little bit more room, but remember, neither of these markets is open. New York and Toronto are still in pre-market hours. So we got a little bit more room to run there in the dollar CAD.
Hey, by the way, will you go back to the previous one real quickly?
Sure. This one?
And there's a reason. I just wanted to chat out. We are doing a how to day trade FX markets on June 22nd. It's designed really for beginners, and we're going to be talking about some different topics, but I wanted to specifically look at this chart and mention Brian is going to be doing a session on parabolic moves and parabolic retracements. So if you're interested in really understanding and analyzing and doing a deeper dive into this exact formation, June 22nd, I shot out the link. You can register, even if you just want to join for that one session or catch the recording, you can certainly register for it. I just wanted to point that out because this is precisely what he's going to be discussing during his session on that day.
Mm-hmm.
So,
yeah, and just to point out here
for you, by the way.
I know, right? Thank you, sir. Another thing to point out too, guys, remember we talked about how we play a lot of these releases. I mean, I think at this point everybody knows that non-farm is arguably the top. If it's not number one, it's number two out there, biggest moving number. We already knew what the ADP number was. We knew that there was going to be a big miss, right? We expected there was going to be some dollar movement. We've seen it right now. Since the 8 o'clock time frame window, we've moved 50 pips. Okay, the reason I bring that up is because if you bring your Nadex platform over, you guys can see here, this is the 8 to 10 binary. Remember, you have to have the binary already kind of the window open. This is how you could have traded this. You see this pullback right here? This is the 825 pullback here. Actually, let me do, let's go down to 15 minute, make it a little easier here. You guys see how this pulled back down? This is exactly what you're looking for. Here is your 8 o'clock window here. And you know what? We'll just go to 5. I can show it better there. You guys see this little dip right here? This was 825. Here's your 8 o'clock, 8:15 window. Here's where the binaries were printed in this time frame. As it pulled down, you can see we jumped 1, 2, 3, and now we're out of binaries.
Yeah. So, by the way, I because I know we're also running out of time, and I want to take a look at some other things. This is rather interesting because we're watching it play out. Each one of these moves. Let's just start with the euro. People were waiting for that pullback. In fact, you can see it's got a pretty long wick on the first screen chart, and then it started to pull back, and it's just taken off again. I mean, it's just continuing. You can see the second. I mean, these are 15-minute candles doing the same thing with the Aussie, same thing with the pound, and then to the downside. Every one of these actually had started to make a retracement of this initial move, and then more traders came in, and they're just extending it. They're just continuing to push.
Everybody wants a piece of it today.
It's going to be an interesting day. I think the FX markets and the binary options definitely going to be something to be looking at. It's going to be busy. The other thing I think we wanted to mention before we is can we do a little something on gold? I'd like to do just a little analysis on gold because gold did spike here. Brian, I guess I'll flip it over to you as I bring up a gold chart.
Sure. I mean, here's where gold, I'm going to take it back off of 15. We only use that for the indices. So, I mean, gold's popping up again. We knew we had a little bit of a hiccup at 1882, but that was more catching it on the downside. As you can see, gold was pretty lost here, right? It was just going sideways. We didn't even really see the European session open was right here. And again, what did the European session move do? It drove it straight down. Whoops. Let's change it to this. Let's change it to this so you can see it, and we'll make it really dark. There was the European session, right? 3 o'clock is right there. So what did they do? They drove the price lower in preparation for this. And again, you can see all the buyers in here because we have a situation where we have this and it goes straight up in the morning, right? They stepped in, they stepped in, they stepped in, they stepped in, and it get higher, 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 and higher. And again, could you have played a breakout in gold? Think about it. Ask yourself, was it a good opportunity to trade gold this morning? Answer is absolutely, right? Non-farm's the biggest number out there. What is the biggest question right now? Are the interest rates too high? Are we in a bubble? Are they going to raise them? When are they going to raise them? What could it do? What does inflation look like? And again, if you think about it, is this is this number an inflationary number? Yeah, they're starting to pay people twice as much. It was supposed to be 0.2, but it's coming in over double, right? That's an inflationary based number, which again leads gold to pop. And again, very decent move forward. I'm on a 30-minute chart right now, but we're talking about a $16 move in gold. When you look at gold on a daily basis, you can see that it's only got about $23, and that's because we have some absolutely just enormous candles in here, right? $23 is the daily ATR, and in a 30-minute window, we were able to move basically half of that during that time frame. So again, it's one of those things. If you play with a shorter duration contract, you're able to take advantage of these spikes. I would say right now, gold's got a little bit more of a clearing up until probably.
I think so too.
The birds.
By the way, I just want to. You look at your chart. I mean, you can see that move down was yesterday. And it's as they pushed gold.
Yeah, this was 7 o'clock in the morning yesterday down. So this was the news yesterday.
The day before. Yeah.
Yep. And then here's the open yesterday. So here
it went sharply sideways.
Yeah. So here's 9:30 to 9:30. There's 9:30 to 9:30.
Could it go right back where it came from? Yeah, it could.
Yeah.
And not to mention the fact, you've got it on there as well, but that level is that psychological level.
Mm.
It's the 1900 level. Now, am I telling you it's going to go back to 1900 today? No, but could it? It certainly looks like it wants to.
Hmm.
So we're going to see some volatility today, not just in the dollar, but also gold. I mean, I think it's just rather interesting that they pushed gold that far down yesterday for it to go pretty much sideways. I mean, there was a little bit of a move um, around midnight, but then here it is. The news comes out,
Mm.
and to see that retrace all the way again, another parabolic move and a parabolic retracement potentially in gold.
Hmm.
Um, yeah.
I was just looking at it. The cryptos are basically reacting the same way. So
Oh, they are
nothing,
interesting.
nothing different there. So, but yeah. So overall, I would say in DC, I would say they stand more of a chance for a positive day today. Again, seeing these all spike forward, the data was good, and again, the Fed's in action will only help the indices overall. So as long as we don't have too much profit taking stepping in, and again, we have a lot of room up to the 34,789 level. You can see we have a big racetrack over here. A little bit of an issue right here, but again, the retail traders should want to buy this today based off of the positive news. So we should see some basing and then a pop higher. And again, maybe it's a feel good Friday going. It wouldn't be a bad day for a feel good Friday, right? So
Yeah, right. It sort of set itself up front.
Mhm.
And by the way, the equities are all slightly in the green. We'll see what the day has to bring
Yeah.
for us. All right. With that, if you've got any questions for Nadex, please email us, customer service at nadex.com. We can't help if you're having any challenges if you don't reach out to us. So please email us. You got any questions for Brian? Please email him. He is also very accessible. You can catch him at support@keeptradingsimple.com. And what did we talk about today? Just a quick recap. The May jobs numbers came out. An immediate reaction, significant reaction in the dollar across the board. Dollar weakness across the board. Gold spiking higher, and we've got equity slightly in the green. With that, hey, maybe we will get a feel good Friday, everyone. We will catch you again Monday morning, and enjoy the weekend. And good luck in the markets. Thanks, everyone.